Hi, my name is Nivedhika, and in this video, I'll be talking about a problem in India's economy, which looks good on paper but hides some serious issues underneath. India's GDP has been growing at a decent rate. In January 2024, the National Statistical Office estimated that the growth in India's real GDP would be 7.3% during the 2023 to 2024 financial year, one of the highest among major economies. This estimate is higher than IMF's December 2023 projected growth of 6.3%. Also, high levels of capital formation have been driving India's growth during the 2023 to 2024 fiscal year. The government has prioritized capital spending in its recent budgets, and state governments are also supporting this. As a result, gross capital formation has increased by over 11% during the 2022 to 2023 fiscal year and is expected to expand by over 10% during the 2023 to 2024 fiscal year. Judging by these macroeconomic indicators, the Indian economy has performed well in 2023. However, private companies are not investing as much as they should be. Private investment fell from over 14 lakh crore in February 2023 to below 2 lakh crore in October 2023 and recovered marginally to 2.2 lakh crore in December 2023. Also, FDI foreign direct investments have decreased by about 4% compared to last year. This is important because if businesses don't invest, it slows down job creation and makes it harder for our economy to grow in the long run. We need both local and foreign investors to believe in our country and put the money here. This lukewarm response from private investors is concerning because the government will not be able to sustain high levels of capital spending while addressing deficits due to spending on social sectors and welfare schemes. The focus on capital spending has caused a relative neglect of other sectors in recent budgets. Recently, the government has also shifted towards welfare schemes. For instance, in 2023, it decided to provide free grains to around 810 million impoverished people, which is about 60% of the country's population until December 2028. Another big concern is inflation. The government expects retail headline inflation to be marginally higher in 2024 at 5.4%, increasing from about 4% in 2023. Food prices, in particular, have shot up by 9.5% in just 1 year, making it harder for families, especially those with lower incomes, to afford basic necessities. Another area of weakness that the GDP hides is the slow growth of agriculture and allied sectors. These sectors grew by less than 2% in 2022 to 2023, which is half their growth in the previous fiscal year. Uncertain weather conditions, uneven distribution of rainfall, as such, have affected the performance of these sectors. These sectors must grow significantly and at a higher rate because higher incomes in these sectors also increase demand and acts as an impetus for manufacturing and service sectors. The National Statistics Office predicted that the manufacturing sector will expand by 6.5% in 2023 to 2024, higher than the 1.3% growth in the previous financial year. However, some important industries have actually decelerated between April to November 2023. For example, output in the apparel industry has declined by over 20%, and output in the computer, electronic, and optical products has decreased by 15%. The computer, electronic, and optical products sector is one of the industry groups that the government hopes to improve the manufacturing sector and position India as a major producer of these technological products. Now, to address these challenges, the government has to manage resources effectively to curb inflation and ensure that the welfare programs reach those in need. In the agricultural sector, there should be investment in modernization, irrigation systems, and market reforms to improve productivity and farmer incomes. The government must also prioritize encouraging business investment by creating a conducive environment and offering incentives to both local and foreign investors. For example, this could involve investing in research and development to foster innovation in manufacturing processes or products, implementing skill development programs to train the workforce in modern manufacturing techniques. The government should also spend on infrastructure development such as transportation, power supply, and logistics. This will be essential to reduce costs and increase the efficiency of manufacturing operations. Moreover, the government could promote export oriented manufacturing by providing incentives and support, which will increase India's share in global markets and increase the access to international markets as well.